What's happening, traders? Welcome to another video. It's Emmanuel from Live Free Effects. If you've been looking for a good, reliable trading approach, then look no further, because today we're going to be diving into the only pullback and Confluence price action strategy you will ever need. If you're a seasoned trader coming into the market, or even a beginner trader coming into the market, this video is going to be great for you because there will be a lot of valuable insights and valuable information shared. Let's waste no time. Let's dive right into the video. Before we dive into the pullback and Confluence trading strategy, the very first thing that we want to ask ourselves is, what is a pullback? In the market, a pullback is a short-term reversal in price action before the overall trend resumes. It is also seen as a temporary move in price in the opposite direction of the overall trend. And ladies and gentlemen, the reason why this is important to understand is because a pullback is one of the foundational aspects to a lot of price action trading strategy, because as a trader, your number one objective is to buy low and sell high. So if you're taking a look at whether stocks, commodities, futures, or forex, price action charts, what you're likely going to see is this phenomena happening, because the market, when price moves, right, price doesn't just move up all the way and continue to move. What the market likes to do is it push to the upside and pull back, push to the upside, and we get a pullback, right? So this is how the market moves, because it wants to give traders what I like to call premium price. Because if you walk into the grocery store or the supermarket, for example, and you are paying $5 for what you paid, maybe $2 for yesterday, that's no longer premium price. You are now paying double the price than what you paid essentially yesterday. So as a trader, it's important that you understand that the pullback strategy is there to help you minimize your risk, right? How much you are risking on a particular trade, and also minimize your drawdowns as well. Because if you get involved in a trade, let's say you get involved and you buy right here, it puts you in a disadvantage, because you get involved right here, you see the market drop down significantly. So you might still be holding the trade, or depending on what you've risked initially, you might close the trade with a loss. And same thing right here. So it's always better to wait for a pullback. Now, as we dive into the methods that you can use to identify the end of a pullback, the very first method that we're going to be going into, or the very first method, which is a confluence, is support and resistance. When you take a look at any price action chart, one of the things that you're going to see is that past support becomes future resistance, and past resistance become future support. So if we're seeing buyers come into the market and price is making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, what's essentially happening is past support, or past resistance in this case, is becoming future support. Past resistance becomes future support. And the same thing happens in the sellers market, right? If sellers are in control and the market is trending down, right, what happens is, past support becomes future resistance, right? In this case, past resistance becomes future support. So we see that right here, right? So taking a look at a price action chart, that's essentially what we see. So we see that as price is pushing higher, it trades back or pulls back into a level of resistance, and this past resistance now becomes future support. We can see that right here as well. So taking a look right here, same thing, right? Same phenomenon. If we go over to the left just to see, what happens from a seller's standpoint, we can see the exact same thing right here. And what we see here is past support now becomes future resistance. Past support becomes future resistance. And this just continues on and on in the market. So one of the most effective ways to identify the end of a pullback so you can minimize your risk, minimize your drawdowns and get involved in the overall trade in the direction of the trend is using support and resistance. And how you can identify that is simply just by identifying, if buyers are in control, you look at the past resistance, you mark that level, and you essentially just camp out and you wait for price to trade back down to that level, because when it does, you're likely going to see a bounce. And what we see here is essentially the exact same thing. And as we see price continuing its move, right, we see that the market is also finding a support level right here. As price is finding the support level, trades down into this past resistance, which is now acting as a support. Boom, we see the market take off. And as price is taking off, what you as a trader is doing is, okay, well, this is the move, this is what price does. How can I get involved in the market in the overall trend? So what you simply do is you identify the past resistance and you mark that level as your support level. The next method you can use to give you a greater confluence to identify the end of a pullback is multiple time frame analysis. Ladies and gentlemen, when it comes to trading, there is nothing greater than perspective. The more perspective you have, the better decisions you can make. So when you use multiple time frame analysis, you have a higher time frame perspective, which is coming from the daily time frame. You're looking at the 4-hour time frame, and in this case, we're also paying attention to the price action on the 1-hour time frame. It's also important to use the 15-minute time frame or the 5-minute time frame, essentially the lower time frame for your entries, because that way you can gain lower time frame perspective, because some of the moves, right, the changes in directions will start happening on the lower time frame first before they transition onto the higher time frame, like the 1 hour. Every candlestick on the 1 hour represents 1 hour, right? So it will take an hour or two for you to even notice that things are changing. But if you go over to the lower time frame, you'll be able to, watch a 5-minute candle or a 15-minute candle and gain the perspective there. So one of the things that I like to do is right here, we've identified our support level. Okay, so now we say, hey, we're gonna see price trade back down into this level, right? So the market, we've identified our support level. Now we can say we're scaling back down to the 15-minute time frame. You could have entered the trade right here. In this case, we did not do that. So what we're gonna do is we're still waiting for our opportunity, right, to still get involved in the trade. And I personally like to do it during the session time, during the New York session or the London session, right? I still believe in trading your session and trading specific times of the day. So as we see here now, as we're taking a look at price action, essentially just waiting for price to trade back down into this level, give us an opportunity to get involved in the trade, and we're just gaining the perspective on the lower time frame. And what we see here as price is going into the London session is that, hey, the market is now also giving us, another opportunity as price is trading back into this past support level. I can also scale down to the 5-minute if I want to gain more clarity or more perspective. The next method, ladies and gentlemen, that I like to use is candlestick patterns. You want to pay attention to the candles. Those are probably one of the great confluences that you can use when it comes to your entries. As we're watching the market right now, we know that sellers are dominant. We are essentially looking for an exhaustion, whether it's an exhaustion candle or an engulfing candle on the buyer side that will give us further confirmation that, hey, it's time to get involved in the trade. So as we start to see here, let's see what happens. Okay, we're seeing consolidations. Okay, consolidations. Boom. Okay, so now we're seeing a change from the buyer side, right? Buyers are coming in and we can see, a bullish engulfing candle on the 5-minute. So as I take a look at this right now, I know that, hey, all my 3 confluences have given me a spot on opportunity. Past resistance has acted as support once, and now we're also at this level again, and price is still finding it very difficult to break lower. I have used multiple time frame analysis to just gain a larger perspective, and on top of that, I also have confirmation, with the candlestick pattern as well. So I feel like with this is enough confluence for me to make my decision. And what I'm going to do is I am now going to put my stop loss. 31 pips is pretty good. I like a 2-to-1 or 3-to-1 risk to reward ratio. So either 60 or let's say 70 pips is what I'm going to be shooting for. Now let's go over to the 15-minute time frame and see. Okay, so we get a little bit of a drawdown. Price is not going in our favor yet, but we're still overall in our support level and we're not tripping. We're not worried because we know that the support level is holding. And what we start to see is price starts to move in our favor. There we go. Okay, we get price pull back still and pulls back into our support level. There we go. And we essentially, have a winning trade. So that's simply how we do it. And what we see here is we had a drawdown of about 12 pips, right? Imagine if we entered the trade right here. We would have had a drawdown of probably like 50, 60 pips. How many of you set your stop loss at 50, 60 pips, right? So that's very few, and that would be a very, very large stop loss. So there's a high probability that if you're not trading pullbacks or you're not finding ways to take advantage of pullbacks, you're putting yourself at a disadvantage. And this is essentially how you do it. In this video, I wanted to talk about how you can, identify the end of a pullback. Ladies and gentlemen, everything I have given you here on this, buy or long trade can be used in a sell, market as well. It's essentially just the opposite, right? So it works the exact same way. This is the video. I hope you found it very insightful. If you have any questions, leave a comment down below. But as always, thanks for watching, and I hope you're out there living free. Cheers.